Hi everyone and welcome to today's morning report. Charles Fraser with me, Japan Market Analyst at Antic Markets on Friday 26th of May. We have a fairly mixed open really to the Forex trading today. We've got a few sort of or varying factors that are impacting markets. Initially we've had a bit of a safe haven shift on the back of this sharp decline on the oil price last night and into the close, whereby the oil price really did sell off hard after that OPEC announcement of a 9-month extension. A bit of a disappointment on that extension, no real suggestion of deeper cuts, which is obviously what the market would have been looking for. And that hit market sentiment a little bit, with the yen strongly moving overnight, and also gold higher. But we also saw a bit of a dollar starting to find some support, but that has sort of unwound a touch as these treasury yields have just started to drop away again, as on the safe haven sort of shift as well. We've also got sterling, which is significantly weaker today. That comes as the UK polls ahead of the election continue to tighten. One of the polls today saying that it's down to 5%, which is far lower than it has been for a long while. So sterling got hit on the back of that. In terms of your equity markets, running along the same sort of safe haven theme, whereby there's a bit of a corrective move on the Eurozone markets. FTSE's outperforming on the back of the stronger sterling, but certainly I think today we're seeing these markets which are interestingly sort of poised, I think. The S&P 500 very strong, breaking out to new all-time highs last night, and generally speaking looking pretty positive on Wall Street, despite the fact that the market's seen a bit of a safe haven shift. We might see a bit of a pullback today, but certainly still seems pretty strong. Now, in terms of what we've got to look forward to today, we've got US data this afternoon really is in focus. We've got the GDP data, second reading, or the prelim numbers, expected to show a slight upward revision to 0.9 from 0.7, and that will be interesting to see, because the Fed obviously has been focusing on the transitory nature of the Q1 slowdown. So if that is upwardly revised, then that should theoretically, I suppose, give dollar a fair amount of support, you'd imagine. We're also looking at the Michigan sentiment. Before that, durable goods orders plus 0.5 on the ex-transport, which is the core data. Michigan sentiment basically just in line with the last reading of 97.6, mildly revised lower. So we've got that, and my chart today is the DAX. Now, we have seen the DAX, which had sort of been in the last sort of couple of weeks just failing around that old pivot. It's not a massive sort of resistance, but it seems to be in place as a pivot to around 12,660, and it's failed to close above that pivot in each of the last sort of 4 or 5 sessions, and it's just pulling back lower. I don't necessarily think it's going to be a really strong corrective move. I think this is just unwinding the momentum indicators. 50 on the RSI, just dropping back towards more of a neutral condition on the MACD lines. Stochastics, yes, are falling, but I think you're sort of pulling back towards this sort of these breakout levels again. 12,490 was the low on a couple of weeks back, and or last week actually, and that is interestingly above or around that breakout level of 12,486. So you've got that support between 12,375 12,486, which I still think is going to hold. I think that's going to be where you see the next reaction low before sort of pushing out higher again, because the DAX looks pretty strong, and I think if equity markets remain strong, which I think there's no real reason behind why the DAX shouldn't be, then I think further gains. Now you see the hourly chart where you've got the initial support at 12,544, possibly coming under a bit of a test today. If that breaks, then that reopens the 12,490 level. Momentum indicators do look corrective near term, and with the RSI just falling below 40, MACD lines just tracking lower, stochastics lower, but I think generally speaking, I think corrections are going to be still seen as a chance to buy on this DAX, and I don't necessarily think this is got sort of the beginning of a corrective move that lasts any considerable time. So with that in mind, I wish you good luck in your trading, and I'll speak to you later. Thank you.